So for those of you who know what an HOA is, an HOA is a homeowners association. Some of you are in them, some of you aren't in them. But what's really interesting is we're seeing people leave the condo market because of these HOA fees, and they're going up because of why? Because of inflation. Because they're hitting there the same way that they're hitting us at the pump. And they're starting to make their way into things like landscaping and gate repairs and lighting and all the things that you guys all know we're all experiencing together, but they're passing that on to the homeowners because that is what a HOA does. So this is a very interesting conversation right now because HOAs are out of control because these people are doing all kinds of weird stuff.
Yeah, so the biggest issue that you're seeing is the HOAs are starting to make decisions that are influencing the value of your property in order to keep their monthly dues low.
And this was a big one because Danielle actually lost a deal. Like she had a deal go sideways as a result of an HOA. When is the last time you guys heard this?
Well, and you have to look. So right now in the Phoenix market, every market's different, but the HOA costs are in the 400s. And what I'm noticing is that nobody wants to cross that $500 threshold. So you'll have payments that are $460, $480 a month. And any buyer is going to have to absorb that. And anyone that lives there is going to have to absorb that. Well, I think there's something with the $500 mark everyone's trying to avoid. So they're starting to take away certain things because they're trying to budget. And what everyone forgets is an HOA board is not a bunch of strategic real estate investors. They're typically older people that don't have a lot going on, that are sitting around a table and they're making decisions that can affect the value of your property or can affect, your lifestyle. And they really don't have a ton of options because everything got so expensive.
I remember when I sold the house you and I moved out of, Danielle still hangs out with some of these folks, and they were one of them was on the HOA board, and they said we tried to block the sale of your house because of that palm tree, right? I was like, what?
We had a palm tree fee because there was a palm tree that had been approved since Ken lived there like 20 some years ago. But in the time they had decided that
no palm trees,
and they wanted to see the approval form that we had for it. I mean, we're talking.
And they didn't like my palm tree. So anyway, the point is like they also made me take down a basketball hoop. I painted my house the same color that it was. It was just faded in the front because of the sun. In Arizona, we get a lot of sun. And so it was just a lighter shade, but exact same color. And they went after me for that. So you guys all know, like, I'm not a huge fan of HOAs, but they do bring a purpose. And they do manage a lot of things collectively. But to Danielle's point, they also get really petty about parking and pets and paint color.
But the condo has to have an HOA because it's a bunch of people sharing the same building. It's very different than a house.
Yes, you're right.
And it's these condo ones that are really struggling right now because they have so many expenses. And when you have this and you're deciding what they're going to cut, I think the first thing you kind of notice is perhaps the landscaping's not getting done as much, roofs aren't getting fixed like they should. So the area starts to look a little bit dingier because they're not keeping up on all the maintenance.
Well, so just take a look at, you can tell the health of a condo, the reserve account and how it's being managed by a few things. Number one is, do you have gates that aren't repaired and are sitting that way for a while? That's the first.
Are they just open all the time now?
Correct. Like people hit those gates all the time, right? Number two, parking lot, right? Common area, parking lot. 3, curbs, right? 4, landscaping. 5, exterior paint, right? And we haven't even gotten into the roofs, right? Roofs are all common areas. Think of anything that's common areas. Maybe you have a pool that's got a lock on it. Maybe you got a pool deck that looks like crap, or pool furniture that's getting old and they haven't repurchased. Those are all things that are common area, mailbox areas, those kinds of things. So you can drive a property and pretty much see whether or not the HOA is doing their job or not. And so the issue is, of course, you're going to see a lot more deferred maintenance. That is for sure, guys. They're going to start making cuts, and what not in every case, of course, but these are things that somebody sits on this board. They don't know anything on how to run real estate. But they sit there and they look at, how do we get our landscape? How do we save our, I know how. Instead of 3 days a week, we go to 2.
But the truth is, though, is a lot of people are concerned about, from what I've been seeing with a lot of condo complexes, is that a lot of these board members, it is what they're concerned about is the landscaping and the outer exterior. But where they're trying to cut is things like insurance costs. So that's what this deal went sideways.
Oh, that's a good point. You should actually bring this one up because you're right. Again, let's talk about real quick, and I want to frame this real quick. Let's say your payment for your insurance policy for an HOA is $10,000 a year. Let's just say, okay, $10,000 a year, you get so much coverage. Well, what happens is that might go to $15,000. This is what's happening with insurance. Okay, so the board says, you know what? How do we get it to 10? How do we get it back to 10? Well, the only way is to eliminate parts of the coverage. And so this is, I wanted to set that up for you because this was a decision that was made. It was driven by financial, because what happens if it goes to 15? That is a budget bust. And then they have to go back out to the homeowners and say, hey, you need to pay a little bit more to be able to cover this insurance cost. And then they have to, while they're sipping a cocktail with their neighbor, they have to go, why did you increase my HOA dues?
But not even just that, but a lot of people on the boards, these boards are older. So they're not really planning on selling their place anytime soon, nor do they necessarily need the money. I mean, imagine a 75, 80-year-old person on a board. If her condo value goes down, it's going to her kids anyway, so she doesn't really care. So what happened was they lowered the insurance so they could no longer get conventional financing.
Explain how that worked, though.
Because Fannie and Freddie require $50,000 deductible per unit. They raised their deductibles on each unit to $100,000.
So let me just, before you jump over, this is a really important point. One of the ways to get your insurance payment lower is to raise your deductible. Just think about this as medical terms.
Or a car.
Or a car, whatever it is. So you see this with car insurance. You see this with health insurance. You can raise your deductible, your out of pocket, and lower your payment. And so that's how this works. And so this is happening at the HOA level, where they raised it from 50, which is what Fannie.
They dropped it from 100,000.
They raised it from 50 to 100.
Yep.
And because of that, they can't get financing.
Right, because and it's not a bank issue. It's a Fannie and Freddie issue. So basically a bank lends to you, then they sell the loans on the securities market to Fannie and Freddie. So the only way now in this condo community, and this is important, that somebody can buy something is either cash or they can do a non-warrantable loan. So non-warrantable loan is something that the bank does and they keep it on their books. So they don't sell it to Fannie and Freddie. They'll just keep it right on the books. Problem with that is it's not conventional. So it's between 8 and 10% interest instead of 6.5 to 7% interest. So when I called the board, because they just made this change in February, to let them know, the lady on the board told me they don't care and people can still get a loan, and that's all she's concerned about. People can get a non-warrantable loan. It's fine enough for her, whatever. So these properties are going to go down in value because if you look at your buyer pool, there's no FHA, there's no conventional. So you need somebody that either has cash or has very good credit, can put 20% down, and doesn't mind doing 8 to 10% loan. So your buyer pool probably shrinks down by 75%, okay? And the HOA doesn't care. So the sellers are upset, but the sellers can't do anything about it other than give their opinion because they're not on the board.
So said another way, the board's decision to increase the deductible is negatively affecting the values in the community, the property values. And
significantly.
And this is kind of the point, right? There are things that the board can do and does do that can affect the saleability of your asset if you're buying somewhere or or you're in somewhere, because the issue in Danielle's case that she took, which is the right issue, was yes, my buyer could buy it, but now they're in this cage. Now they're part of this, and so if you should be thinking about the exit. When a lot of people just think about the sale, but in Danielle's case, she said, I don't think you should buy this, because if you want to sell it, this could affect you, which is the right way to think.
Yeah, because especially since they just made this decision, I told my buyer, if you want to buy in here and you really love it, just give it a year, because all these prices are going to come down specifically in this community, because they can't, and it's already starting to. You have 3 or 4 units just that have been sitting and keep falling out of deals because of this. So you just wait.
Yeah, just let the board,
Yeah.
let the prices come down, buy something in there, fire the board, and then let them go back up to market.
Exactly. That's really the play, but that takes a long time, and things don't just automatically go back up, because people base prices on previous sales. So as things go down, they're going to take longer to go back up. But I was thinking about this, and a couple things. For one, I think if you're in a condo community, you should be either going to the board meetings or reading the meeting notes, which I've never done before. I've owned condos, I've never read meeting notes, but I think it's important because this stuff comes up in the meeting notes. And as a savvy real estate investor or homeowner, I think you need to know what they're planning on doing, and what you need to do to be there to protest it, or get a group going together if it's something that's going to negatively affect your values. The other thing is, if you're buying in one of these communities, I think you need to be requesting the HOA meeting notes and reading those too, because you have to understand what they're planning on doing, because these HOAs, they're not. Before it was just, the landscaping, or the painting, but now, they're really starting to dive into changing insurance policies. I know one of my places stopped doing pest control. I mean, what could go wrong there? So they're making all these decisions they can really affect and cause problems for you as an owner.
Yep.
So you just need to be aware, and you can't put your head in the sand like all of us have done for years, and not really cared what decisions that they were making.